want to cover here, guys, is like how to find the way to kind of post. So like if I go through the stream and I'm just going through here, right? So we have Joe G. Now on my screen here, I can see that he has a post, and that post is at for my time, it will say 7:55 p.m. Right? And what that really does for me at that moment is I can go back and on my PC, it lets me know when it was posted, and I can look at that trade based on TradingView. So I can see that he has a long at 100x, 755 today. He posted it, and then entry price was 151.81, close price 151.33. Now, when I see a post like this, normally it should have a it should be a reply to the entry post, right? So if I scroll up and I'm looking right here, so we got in a token at 30%. Okay, so he's here. So what I'm doing is I'm scrolling up because there is no reply. So I'm scrolling up. Something's wrong. Okay, XRP. Okay, looking at XRP now for a long entry, but I don't know what to do. Haha. All right, so now he has a green moon on 10-minute, but can't pull trigger. Now, what I mean by this is that if what he should have done was on this post here, the what happened to the trade, he should have replied to his earlier entry. So whatever which one of these he did as the entry, like a green moon 10-minute, it should have hit reply, right?
Okay.
And it should look like that. So basically, I'm gonna take a quick picture of this, copy image. I'm gonna slide up, and it would look like this. So green moon, pull the trigger, hit boom, reply, and then what'll happen is post like that. And then what happens is when I go to the new reply, whatever it is, I can then just go to the first comment, and that takes me to the time of his entry, right? So I don't have to go looking for it. It's very quick, very fast. So he posts this loss. I click to look at his entry, and now I can see at 7:27 p.m. he went for a green moon on the 10-minute, which allows me to go to XRP. Now I know we have an entry on the 10-minute, and now I have a time frame of which when this happened, right? So this takes me back up, and it looks like it's 7:27, right? So I can go and look at my time frame, pull up the 7:27, time frame. I also know from the post itself at the bottom, I have an entry post. I have an entry of 151 at 7:30, right? So then, based on your time frame here, I can see that it was an hour ago, right? So I'm at 2020, so I need to go 1920, right? So what I'm going to do is I'm going to go to the 1 minute, so I can kind of dig into this a little bit better, and I'm just going to put a box. And this box is just going to allow me to see that time frame on the chart of the entry. So this would be the entry and his area, and I'll just turn that white. And now that I have that, I can also like see how it coordinates with the moon indicators, right? So now I can open this up a little bit more here, and we can evaluate all the basics, right? So the first thing is he has a 10-minute moon, right? So we go here, and then we can see that he does have a 10-minute moon here. Now my 10-minute moon is a little bit quicker, so it would be somewhere off of here, and that would be considered my 10 moon candle. I'm giving it one extra candle for lag, and kind of like pulling across there. So that way I can understand where that should be. And then you can see here on the time, I can look at the time, and that should be 7:19. So when he posted um, that particular moon, it was 20, almost 30 minutes later. So it was, 3 candles away, right? So right now, the 10-minute moon looks pretty good. Let's slide over. We're going to check the 15-minute moon because those are the two moons that we've been kind of like using for this. And then this one here is where the 15-minute moon comes in. And this is why I started, talking about using the 10, just so that we're getting that quicker information to make the decision. All right, so now that we have this, I'm simply going to post a white arrow down inside of the moon indicator. I'm going to post it down on the stochastic RSI, and I'm going to post it down on the RSI itself. And the reason why I'm doing that is because now I'm going to go check the steps that we have for all this, right? So this trade here, I can just do a quick check and I can go, okay, based on the 4 hour, right? So right here, I can see that if he's pulling this trade, the 4 hour RSI, the regular RSI, at that current time was actually in a downward move, right? So on my 4 hour, I can see here that we have a downward move, right? So to me, that's not, we can't go really long on that action. And then the next thing I want to check quickly is on the 4 hours. I want to check this stochastic RSI, and we can see that both of those right there are heading down. So right now we're not in a good long position because for this trade, the things that we need, the main thing is that the RSI has to be headed up, and the second thing is that the stochastic RSI should be breaking above the 20 or at least heading up or not down. So those are kind of like the basics. But the number one thing for this trade is just the RSI heading up on the 4 hour. So that right there is, so for the trade that we developed in boot camp, we wouldn't be in this trade yet. So we still haven't, we don't have a long position for this, actually started up here yet. But this is how I can evaluate a trade when you post correctly. Because then I can look at all that and go, okay, well, the 4 hour is not there, that's not there. And then I can jump down to the 15 minute. And then on the 15 minute, I can take a look at the RSI itself, which is normally uh, kind of what the original trade was. And then that's normally when the 15-minute RSI is breaking up, which we see right here, which would have triggered him to think of this trade here. And then he did catch the moon, but he waited on those candles. So on this, I can reply, right? So I can go back to chat. Now remember, how you post matters. If you post green moon on 10-minute, right, and you pull your entry, right, and then I see this here 151.81. Now I can go here and I can mark off the entry, right? So 151.81. Let me get a price. 151.81. Let me go to the 1 minute. And let's see here. So 151.81. This is kind of where the price went down, somewhere in this section here. Because he has a 7, let me see what time the trade was. See, it doesn't get the time here, but based on this older spot, somewhere after 7:27. So I can look here and go, okay, 7:27. So somewhere around here is where the 1581 is relevant, which is probably at this point here. I will say it's probably his entry point, because this is after the time he was talking about a moon, and that allows me to see that. So now that we have that, I can take this here and just kind of like create an entry line, and that'll tell me that we have our 151.80. And now I can do a little things as far as like evaluating this, right, where I can just take a quick peek, do a long position. I can see that from that point there was a push up that was about 0.3, and then we had a pullback here that was about 0.3. So if you're running a 100x here, this 3% move would have been about a 30% profit area, and then the downswing would have been about a 30% stop loss. So more than likely, I'm going to say probably going to get stop loss right there. And then after that stop loss, obviously the trade goes crazy, right? So that is just so that we cover how to post properly. Make sure that when you post, when your entry, whatever the entry is, green moon, something like that, you just put the trade in, right? So that we can kind of go in there, right? So which means like, just kind of like going off of what he has here. So he has a green moon on 10-minute, right? Now I know Joe G is doing a specific trade because it's the 15-minute one. But what you would do is the first thing you post, right, is what trade it is. So you go 15-minute, right, RSI trade, right? And this one is actually very specific. It's high leverage. So you can put high trade, right? So high leverage trade. And then you would be posting what's happening. So the very first thing you should post is strategy 1, right? And what strategy 1 is basically the the trade um, confirmation, right? Which is simply why you're making that trade, why this is a trade, right? So that's your strategy number 1, right? And for this, our particular thing would be that the 4-hour RSI has started up, and that would trigger the trade, right? So it would be the first thing you would post here is strategy number 1, and that would simply come down to this, right? Why the trade is happening. So after we post this here, 15-minute RSI high trade, then we would post 4-hour RSI above, I think we're breaking 50, right? Breaking 50 line, okay? And that right there is the post, okay? Not all this extra stuff. This is just, explaining what you're actually posting. But that would be the post. And that post would go down. Everybody knows what that is. It's a 15-minute RSI high trade, right? Meaning that it's the 15-minute RSI, it's high leverage, and that's the trade that we're tracking. What's happening with it is there a 4-hour RSI breaking the 50 line. So we all know what that means. If you're in the boot camp watching the lessons, you know what that means. The next post I would make, I would basically make my entry, which would be, at this point, that's already in there. So 15-minute, you can abbreviate stuff, right? 15-minute RSI H trade, meaning high trade, I'll figure it out. And then you can put on there 10-minute, right? So this is where you're actually putting the next bit of information after you post the confirmation of the trade. You are putting in strategy number 2. And strategy number 2 is simply the entry, right? And that's pretty much what we're posting here. So for this particular trade, the entry is 10-minute green moon entry. And the price would be 151.8. And then boom. Now, after all this happens, whatever the results are, I would come back to my entry. I would hit reply. I would post my photo, and bada boom, bada bing. And now I can go back and look at this entire trade, and I have times I can evaluate this trade, break it down, and then I can write what happened, right? And at this point, that's what that is. So just like on his trade up here, I can go back and basically turn around and say, okay, based on this trade here, wherever he posted here, right? I had to do a little more work, but I could post this. Okay, trade feedback, right? 4-hour RSI. Let me go take a peek at it just so we can kind of get the full data. We go over here, 4-hour. And at that point, I can see that it's heading down, right? Heading down. Then I can put the 4-hour stochastic RSI heading down. Low volume. And then boom. And now he has feedback. Then he can go back, look at the trade, and say, okay, well, let me take a look, and and I can post, kind of like this. I'll take a post like this. I can open up the 2 things that we're really looking at, which is this and this, and then I can just snap a picture can mark the 4 hour, and then he can see here that at that time, both of those scenarios were happening. And I just, before I post the feedback, I post that picture with it. And that's how we do feedback: clean, simple, and to the point. So now, Joe, like seeing how I did that, do you understand why the trade didn't really go well?
Yeah, sorry it might be a little loud, but yeah, I understand.
Yeah, yeah.
Is there just wasn't enough volume?
Yeah, yeah. So that's, I mean, but when we post, the posting, the way we post, we do it this way, right? Because when I go back to your post, you have steps in here that you're kind of like thinking, right? You're like looking at XRP
Yeah,
for a long entry,
yeah,
and then you're like green moon on 10 minute, right? But then that green moon happened, and when we look at the chart, if you wouldn't have hesitated, the weird thing was if you would have like jumped on that green moon, you probably would have hit on that one, right? Even though it was a not the greatest scenario of the trade, not the ones that we really want to pull, but based on how you were trading at that time, or how the other way that you learned how to trade, that 10 minute happened over here. You
right.
see?
Yeah.
So when we look at this and we go down, that's our 10-minute moon right there. So if you would have took
Mm-hmm.
that entry on that candle, your worst entry probably would have been 151.86, in that area there, right? And then from there, you're doing 100x leverage, right? And let's say
Right,
like you get in here somewhere, and then the move to the top before anything really goes bad is about 0.25. So it does hit 25% in that area before it dumps, right? Now, depending on how you entered there, this candle here was your entry, so you really should have been somewhere off of here, or the worst
mm-hmm.
case scenario would have been opening this. But at the end of the day, it still hits a 25% before it dumps, right?
Right.
Now after it dumps, you can see that that's where you were looking for,
Yeah, yeah.
right?
But it,
So,
it took my stop loss out right in there, I think, where your trend line starts, and then it
mhm.
went up.
Yeah, yeah, yeah. So
Yeah.
that's where when you evaluate it, you can go, oh, okay. But that's how we can look at all this and basically determine what happened during that trade. Now if we look at this a little bit differently and say, okay, um, what you were doing, how you jumped it, and everything, it doesn't have all the momentum it needs, but it did at that time, have a 10-minute moon for you, right? So it did have a 10-minute moon that you were popping up, and on that
Right,
next move, if you would have took that trade, you could have been in a position there to um, be profitable. The problem with high leverage trades is that they don't have any forgiveness for jumping a trade. Okay, and what I
right,
mean by that is leverage. Like I always say, leverage isn't for it doesn't reward those who jump trades. Leverage is rewarding for the people. It's a tool designed to reward people for patience, meaning that you allow a trade to develop and then you enter, meaning that you might have gave up a full 1-2% move before you entered. Like for instance, letting something go from a channel and then break out of the channel, and then when it retests, you enter. But you might have lost 1% or maybe even 2% there. The leverage is what the multiplier, as it's called, is designed to multiply the next 1% move to make up for the 2% that you didn't get. So if you have a 3x leverage and you miss 2%, or let's say you miss a 1% move, and then you enter when there's more consolidation, it's more confident, and you get 1% again, right? And the total move is 2%. Now, a normal person would have got 2%. You waited until there was confirmation, and you got in with, let's say a 0.5% move left, but you had a leverage that was 3x. So that 0.5% was worth a percent and a half, where the main
right.
person got 2%. you were able to get 1.5%, but you were also a lot safer. And this goes back, I mean, most leverage is 5% or so. So that would actually be where in the real world of trading, let's say we use an average of 5 to 10%. If we waited that long and get a 0.5% with a 10x move, right? Then that's where that 0.5% is now times 10. You see what I'm saying?
Right.
So we end up with 5% on a return, but we're being more patient and waiting for more confirmation. See, leverage is for those who are patient. It punishes those who leap first. Right?
What
It's
do you mean?
not the way the trades go is like when you jump first, that's designed for people that are, going to cost average buy down and then secure a better entry by buying the dips until it runs. Leverage
Right.
was designed not to play that game. Leverage was designed to wait until it moves, find the volume, buy the retest, and then even if you lost 4 or 5% waiting for it to build volume, you're going to get 10 times your money on the first 1% with a 10x leverage. See what I'm saying?
Makes sense.
Yeah. So don't use leverage to jump a trade. Leverage is to be confirmation after you know the move. It punishes you if you jump. It's not designed for that.
Gotcha.
Cost average buying is designed for that, right?
Hmm.
So, I mean, there's a lot of ways to break that down. This is part of what we call the system, right? So, strategy one is the entry. Strategy two, or the trade. Strategy two is the entry, right? That's like how we post, right? First thing we do is we post our strategy one, whatever that is, right? So, whatever strategy one is, that's the first thing you post, right? And that's how we get that feedback, right? 15-minute RSI, high value, high trade, 4-hour RSI breaking the 50 line. The next thing we post is strategy number two, which is the entry strategy. 15-minute RSI trade, 10-minute green moon entry, boom, right? Now, the system, which is the third part, the trifecta, the pyramid to this all, is how you design a execution mathematical systematic system to win the most gains, limit the most losses, and create your wealth, right? That's what we teach in the master course. It's a little bit different, but that's at the end of the once you learn how to master to find your trade and then you learn how to execute it, right? Then once we have that data, we can design a mathematical equation that allows you to reach your goal. But it's like saying, okay, VC, I want to make $1 million in 5 years. And I say, great. Well, how much do you make right now? Well, I'm at a job, I make 1,000 a week. And then next week you're like, yo, I lost that job, I'm making 300 a week. And then you come back, you're like, yo, I'm making 2,000 a week. Then you're like, oh, yeah, I'm making 700 a week. I can't design something around someone who makes 200 and
Right.
I don't know what the data is. Like, you got to be consistent
Yeah.
with it.
Yeah.
So
Yeah.
until you find a trade that gives you a result and we know the money, then we can't design a system to get you to your goal of what you're trying to earn. Right? Does that make more sense? I think that's the easiest way to kind of explain it. But in this
Yeah.
video here, this video here, I just wanted to cover how to post in the free chat so that we can track the trade, right? First thing is the name of the trade, whatever trade you're doing, 15-minute RSI high trade. Then you post what you're doing, 4-hour RSI breaking the 50 line. Everyone who's in the boot camp knows what that is, right? Then the next part is you post, which would be the follow up, would be 15-minute RSI trade, 10-minute green moon entry. Now, even if you didn't put the 15-minute RSI H trade in there and you put 10-minute green moon entry, we could go back and kind of scroll through the free chat and then find your original post, which tells us what trade you're doing. You see what I'm saying?
Yeah. Yeah.
Then, when you finish with your post, you reply to your entry post. Just go find it, hit reply, and then post your picture. And now
Gotcha.
I can link it all together. And then I can
Okay.
go.
So that, yeah, I was wondering why there's a lot of posts of people posting their trades and they aren't closed yet. So that's why, because basically they're trying to let everybody know they're in the trade, what their entry is, kind of thing.
Mm-hmm, mm-hmm, mm-hmm. Right.
I see.
Yeah. But these are the steps we want to follow. Step one, strategy one. What trade are you tracking? This is the trade I'm tracking. It has now turned into a trade. Post number two, I have just found my entry. Whatever it is, 10-minute moon, 3-minute moon, whatever trade you're doing, right? So based on, whatever trade you are, find your trade. You post your entry move to that trade. And then you reply to it with the finished result. Then I can go back, look at it, and I can give you critiques on how to make sure that you don't, lose that, right? So the critiques here would be like, okay, well, there's no 4 hours here at all, right? So that means if you catch yourself in a trade like this, if I show you this chart, right, and this is your trade here, right, and this is why, we have basics to everything. But if I showed you this trade here, right, and let me remove all these things here. Do 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 do. All right. And I say, okay, here's your trade, right? This is what was going on there. Okay. Now look at this candle pattern, right? And this is on a 10-minute, right? A lot of times, I like a 10-minute. I love once a trade is kind of like rocking and rolling. I kind of look into the other sections, but there's, all in how you want to break it down. Normally, the 5-minute or the 10-minute is going to give you kind of what we're looking for here, right? So use the 5-minute at the minimum. What do you see there? What is one of the? We have three rules that we trade by, right? Number one is volume is king because VC says so.
Right.
What's number two?
Trade off the retest, right? Or no?
Yeah, we go by the one,
Yeah, the 1, 2, 3
two,
method.
three.
Right. So yeah, what
Oh,
is
see,
the
what I'm saying is this, right?
from the very bottom there?
Mm-hmm.
What do you call that? That's a bounce, right?
Yeah, yeah. So I mean, what you're looking for, okay, look at the downside, right? So here you have a box, right? And this is where, just on basic trading, like, normal. Here's a cluster, right? This is where it's fighting itself, it's going back and forth. It's going to do two things here, right? It's either going to break down, break up, and then go down, or it's going to break out and retest and then break out,
Right.
right?
Hey, sorry to interrupt, but also look at that. Or I posted that trend line earlier that I was riding.
Mm-hmm.
Um, and which I'm trying to do. I mean, in that particular trade, um, yeah, it just seemed to be respecting that line, and then as soon as it broke that, it bounced one more time, and then it dumped pretty much immediately after that, and that's when I ended up closing. Um, so, um, or I was gonna ask if you think that like that's kind of a valid way of deciding when to close a long.
The
Um,
Okay, so that
or
that
does
would
it
be
depend on the type of breakout it's having?
in volume, right? So that's why
Yes.
when the other day you seen we were getting XRP was pushing up, and then we were closing, we were shorting, right? Luke got in there. Lucas was like, running that thing up and down, and then he posted at 153, 154 an XRP short, and I said no because the volume was too high, and the 4 hour it's like a snowball. When the 4 hour starts to reach its top, it's going to have more momentum, right? More power. It gets stronger as it grows, right? So just like when it's heading down, it gets stronger as it heads down, right? That's why I said we can't take the XRP here until we see the push, right? We gotta let the 10-minute guide us, right? So first I'm gonna see here is I'm gonna take a look at your trend. It's okay to pull this trend line here because it was respecting that. That just gives you, kind of like an ideal of like where you're rolling. It's the same thing if I would look going here, and you can see that it's a little bit different as far as like how it was like moving. This trend line here is tracking the channel, but you can see that it's moving up here, and it's just designed to kind of like work it sideways. And then if you do the trends that kind of go that way, those are a little bit harder to like pinpoint in there. But I mean, they're it's you know most people are going if you're a charter. A lot of
Yeah.
times they like to draw this side trend just to give them an ideal of like where possible bounces would be. But if you kind of see
Yeah.
how this trend line is drawn out, it's just like moving the parallel channel and then starting to tilt it when it starts to move, right? So here's the parallel channel is normally the sideways, and then when there was a breakout, it moves its bottom. So it would just be take your parallel channel, draw. Let's say we had a parallel channel here, and this was the original parallel channel, like this, right? And what we were waiting for in this scenario was for a breakout to happen, right? So we have this channel here, and we're waiting for something to happen, right? And then all of a sudden, get rid of these here, we see a breakout that pops out, right? And right here, we can see that the breakout happens. Boom, we get a run up, right? Now, what happens is during that run up, whenever that pullback starts to come back down, all you have to do there is take your channel and then just push it up, and then as soon as you get to your wick or whatever you are, or the top that it had, you can put it right there.
Yeah.
And now you can see. Let me move these lines here, because a lot of times that's why I say when people are charting, there's a million different ways to chart, but these are just simple movements that you can do without overthinking it. So then I would move
Yeah.
my parallel channel here because I'm riding this trend. And then you can see right there it breaks the trend. And all I have to do is when I break the trend and it goes down, I just pull it down to its last little trend spot, and then I extend the parallel to the top of the last one. And now I can see that the momentum is now going up, you see?
Yeah.
That's how you draw that. And then what'll happen is it's actually what it's hitting is the middle. You see this middle line here? That's where we're actually getting the support here. Is the
Right.
middle of this parallel.
But so when I had that long earlier that hit for 100%, and
Mm-hmm.
I took my profits, which is great. But or I was happy with that, obviously. And then but when it did break um that the line that I like,
Mm-hmm.
it's almost like if it aligns with the volume and everything else, then the trading psychology of everyone else in the coin is like, oh shit, I got to get out of here.
Yeah, because
So
I think this was the trend line you had right here.
yeah, yeah, exactly.
And then once it broke that, then it started basically. You could see where it fought its way back up. But you're right. That's where most people start to say, oh, it's not getting back above that trend line, right? And which is
Yep,
smart because you're trading with the masses. But
exactly. Yeah.
what happens there is that once it goes sideways, you have to put in the cluster box. You got to put that sideways move because that's the majority of traders aren't going to trade off of this trend. Once it breaks that trend line, they're immediately going to build a trend sideways because the trend lines most of the time run sideways. So then what they're looking for here is a cluster, what they call consolidation, right? Which we get. And then what happens is it does the break where it breaks down, it doesn't break up, and then everyone goes and they do the normal thing, which is where they will buy the retest, which is here. See?
Or they're trying to buy those. They're trying to buy that dip and getting wrecked.
Yeah, 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 yeah.
Right.
Yeah,
Yeah.
yeah. I mean, most times people see this dip happen, and that's where this spike happens, right? This spike that happens normally when it jumps higher than it should, it's because limit orders, right? So there was a
Yeah.
lot of limit orders here that spiked this up. But what happened here was the reality was this, right? When we kind of like look at this on a full scale, what really happened was this. there was a pump that happened, right? And if we look at, this the regular way, like this, right? We know that there's a double top area here. See what I'm saying? So normally when you start
Yeah.
moving trend lines like this and that, you kind of lose the basics, right? Most people are going to use a trend line sideways or a channel. And all this basically happened was there's the top, right? Here's the bottom, and it goes kind of rolls through. Once that top came down and hit the bottom, right, had our breakout here, and it jumped up. You see how it spiked here?
Yeah.
That hit it
Fill
once.
that, fill the wick there,
Yeah,
and
filled
but
the
it
order.
didn't, and it made a higher high, but like barely, and then
Barely. And then
yeah,
right there, that first dip down, that would be where people go, oh shit, I should have sold. So when it bounces and starts hitting this little section here, you can see that the people start selling off of that section. You see what I'm saying? They're panic
yeah,
selling. That's where the momentum and the volume change for that particular trade is because people have their panic now because it's they saw the double top. It was actually a triple top because it had that one spike and then it ran it back up there, right? So now they're in that
Mhm.
cluster. So now if we look at that cluster, what we're looking for is what's going to happen in this trading cluster or this channel. It's the same thing as the channel, it's the cluster. We call it clusters because it's just consolidation. And when that cluster ends up breaking through, right, it hits all the limit orders that people had down here. And now on that bounce, all the people that have been waiting here, which is the consolidation, hoping for the move to the up, when it drops down here and it bounces, they realize that this is not going to happen. So then they
Yeah.
sell here, which causes this big sell off. And then we start again. So yeah, there's all the saying what you're starting to see the psychology of it is like, yeah, this you can't fight, retail investors. They're going to do
Well,
what they
that's,
do.
I mean, it's also just showing me the benefit of like focusing on one, or reminding me when you focus on one coin
Mm-hmm,
and
mm-hmm.
you start to understand how it moves rather than seeing something that's up 40% on the, or whatever, and it's moving crazy and you're like, oh, this just moved 6% in 10 minutes or so,
Yeah,
like there's probably a big trade in here somewhere. But in reality, it's kind of a lot, or it's a lot more unpredictable because the coin is probably 0.02 cents or whatever, and there's, and someone can buy 100 grand or
yeah,
sell 100 grand and just
yeah. I
fuck up
mean,
your day.
fuck up your day. Yeah.
Yeah.
Well, that's why all that is like you are you're standing in minefields, right? And any step ends it. You have to get to the point where you work your way up and you hit the minefield, and then you say, "Up, oh, I'm going over here to the new road. I'm not risking. I'm not getting caught in the risk of what's going to happen." That's why we have those targets. We set everything up, and we just execute, right? Because what we want to do is we want to find our trade that is consistent at 30 to 50, like averaging 30 to 60%, right? Because if it does that, and we can do that 8 out of 10 times, 7 out of 10 times, and the negative to that, and we're gonna spend a little more one on one together because I got to break some stuff down for you, but and the negative side, we hit them trades. We don't have to worry about all that other shit that goes on where everyone's kind of stuck in there trying to catch it, because if I'm executing a trade that makes me $300 and I do it 5 times a week, I'm making 1,500 bucks, right? Now I have a lifestyle of $6,000 a month. I don't need to play in the minefields. You
Yeah.
see what I'm saying?
And
That's just
I mean
that's just for fun.
I think just taking, well, I think the 4 hour RSI thing is really helpful. Or I think that was one of my main mistakes I've been making is, I mean, I'll look at the hour, I'll look at, but yeah, like for which way I'm like biased, or if it's just not in a good zone. But like if it's like if
Well,
it
take
if it's,
take it like this, right? Right now, what we're doing inside the boot camp, right, is we are developing. I'm giving you guys the tools to develop trades, right? So this way, it doesn't matter what trade you're doing, what style you see, whatever the hell you're learning, currently, you understand what you need to do to fine tune someone's strategy, right? And believe me, like that's part of the thing that we enjoy here is taking, it's like the person who sees something and it's like, oh, there's a Corvette, right? Like when I was a kid, we used to get these cars and it was like super fast, but then we would tear it apart and be like, yo, let's add more air, right? And we would add all this shit and then the car would be super fast. I mean, that's what you do, is you tear shit apart and you try to make it better. So what I'm doing now is I'm teaching you guys how to tear trade strategies apart so that you can rebuild it so you can understand it. And then when you have it, you build yourself two strategies. Strategy one, confirmation of trade. Strategy two, the entry. And then you get the results. And you follow the same steps over and over. And then once you get the
yeah.
results, you'll know what you need to do, which is either polish up the entry, add another step to protect you from maybe wicks that are happening, which is making the entry better, etc. Right? Those are the things that you have to do to get to the next level. But once you have that basics, then you can just rinse and repeat. You're never guessing. I don't ever need when I'm making trades. I know exactly what's going to happen, right? There's two scenarios. I just know that it's going to do this more than it's going to do that. So I'm
Yeah.
not, there's no emotion to, there's no, I can give two shits. I trade the same way over and over and over and over. And I trade different amounts to basically to see how you guys trade, to see if it's profitable. Like, can we turn 50 bucks into 1,000? You probably know better than anyone. You can take 50 bucks to 3,000 all the time. Like you've seen that shit happen hundreds of fucking times. So
Yeah, I like the minefield analogy though, because like, or if I'm looking back at my channel from the last 24 hours or whatever,
Mhm.
um like I was using I was looking at the 4 hour RSI strategy kind of thing a lot with along with the other stuff that I typically look at. And there were certain coins that looked all right, but the 4 hour was and the 2 hour didn't look good. And then I went to the next coin, and then I found this IR trade, and it hit
Mhm.
86% or whatever.
Mhm.
Um, and it seemed like a great trade. I closed, and I thankfully closed out, and then about 5 minutes later, it dumped 8% in a 2 minute candle, and I would have I mean, like
Got wrecked.
instantly stop loss if I obviously, or if no stop loss, then liquidated. Like, but
You
and
got
it's
only
not
one
like
stop loss.
XRP could very well do that too, and it does.
Mhm.
Any coin tends to have
Well,
moments like
that's what I
that,
wanted
but
to say to you too. I'm glad you said that because you post like sometimes you're trading these coins, right? And I normally I start making videos about this because it's like people are posting like I think we were jumping on a coin back a couple months ago. The hell was that damn coin? Oh, Pippin, right? And I was like, meme coins. I mean, they're exciting. I made like 3 grand on Pippin, and I was like, all right, let me get out of here because what happens is the best meme coins in the world are Solana, Doge, and those are the coins. Like every time you ask me about a coin, I always say to go to Doge, right? Because it's going to do what Bitcoin does, right? And once we get into like memes, right? The amount of money in it isn't enough to be dependable, right? Like when 100
right.
wallets can just jump out and you're screwed, right? I mean, no, there. I mean, it can happen, but it's 99.9% chance that XRP is not going to get rug pulled, right? The
Yeah,
99.9% Dogecoin is never going to get rugged, right? I mean, that's actually probably 100, but
it also like makes sometimes I wonder if like market makers like pump like whenever something pumps for like 100, and then I mean, I almost know for a fact, pumps for like almost exactly 100%, and then they rug you. It's like they're trying to get people out of their trades and into that coin. You know what I mean? I
Yeah.
don't know. I could be wrong, but
It's well, money moves, right? So okay, you got to realize that money makers are very. One thing that about them is that there is no uh, there's no basically there's no emotion to what they do because they are moving markets. They're not the ones waiting for markets to move, right? So when they're doing trades, it's it's just money. It's what they used to say. It's not personal, man. It's just business, right? Once a coin or a project has reached a level that there's just no more, sentiment. There's no more money for it. What is the point of being there, right? So that's why you see them like get into Bitcoin, run Bitcoin when it needs to run, and then they start going, oh well, what about Ethereum, right? And then once they got that running, then they trickle down to the other ones, and then all that starts to move. And then if Bitcoin happens to give way and make percentage areas, they're like, oh, let's go back to the big boy, right? They don't care where they put their money because they know that you have to follow, right?
yeah.
Because they're the ones who are making the FOMO happen, and that's how you have to realize that you got to. That's why when things are at certain prices, I'm like, guys, if you're an X, how are you not buying $1.20, right? Like there's certain levels that of shit that when it hits levels, it's like, yo, there is no more level to that, right? That's like when every influencer in the world was like, Bitcoin is 7,000. I was like, it won't go past 15.5. Like it just won't, because that is the fun that it costs 15. It costs $16,000 to make a Bitcoin. So why would it go below the cost of it? Like certain things are just it's like if you know, you know. But like at the end of the day, it's like if you believed in Bitcoin, right? And that's something I could care less about Bitcoin, but if all the maxis believed that Bitcoin, they should have been buying the shit out of it after 20,000. But instead, they were all sitting around twisting their thumbs until the dividend market came in and they bought 400 million. And that's what moved it to 23,000. And then the exchanges started buying, which moved it to 30. And then everyone started buying. Man, you've already lost a double up, right? That's why it's like funny when people are like, it's the greatest advice is buy when it's bloody. But the problem is people can't mentally buy the blood because their entire fear is that it's going to zero, right? Well,
Hmm.
I, the news here's the news. It can go to zero at its peak. If you think it's
Yeah.
going to zero, then you shouldn't be trading the shit at all. Like you're mentally defeating yourself. It blows.
Absolutely.
That's why that's why when I do like jump in people's chat, it's so funny to me to like their concepts of what they believe, but then when shit is where it needs to be, there no one's making the decision to do what they're supposed to do. Don't tell me you're a Bitcoin maxi, but you're not buying. If I'm a Bitcoin maxi and it's at 16,000 or under 20, man, I'm selling. I'm remortgaging my house and putting 300,000 in.
Yeah,
But
I'm
they
loving
did
this
it.
conversation. I gotta jump for a sec.
Yeah,
Sorry,
you're
y'all.
good, man.
See you later.
Rock and roll, brother. But yeah, so that's kind of where we were here. It's just posting correctly, right? So I'm gonna remake the video, just kind of like dial it down to the quickness. But yeah, we see the trend lines, and so this is the breakdown of the trades, right? So we just want to post correctly. So that's kind of why I wanted to get you guys. What's going on TikTok? I wanted to get you guys understanding, like when we start posting correctly, then we can start dialing. We can have repetition of basically what needs to be done, right? So I'm gonna jump on this. This video kind of